Hi, I'm Cesar Costa, the founder of Etman Multi-Capital. And today I'll give you some ideas on how to diversify your retirement investments. Let me start with a question. Are you happy with how much you're making on your retirement funds? If your money is earning less than 10% per year, it gets harder to build wealth for retirement, right? If you'd like to know how you can make from 10 to 20% returns without a crazy amount of risk, then this video is right for you. I had that same question several years ago. I have worked over 20 years as a senior executive for big companies such as Intel, Lucent Technologies, Global Crossing, Yahoo, Laureate Universities, and I also have started up a few companies. At the end, when I looked at my savings and how much I got on my 401k, I got disappointed. I ask that question all the time. Shouldn't be a better way to make money? Should be a better way to make my money work for me without taking so much risk, such as day trading, stock options, crypto? Yeah, it might be, right? The average returns of mutual funds in the last 20 years is 4.67%. So if you invested $100, today you'd have 250. But then if you discount the inflation of 60%, that would be equivalent to only 150. So 50 bucks over 20 years. That brings you a compound interest rate of 2%. That's disappointing. 2% per year? And well, that's what most Americans make of returns in their 401ks. The amount of money that is invested on 401ks is estimated to be $10 trillion. And all those investments, they barely make against inflation. Another alternative is to invest in the stock market. You need a stronger stomach to support all the ups and downs. But if you take a look at the average return of the Dow Jones stock market in the last 20 years, it is 9.51%. If you adjust for inflation, it's 704, almost 7% per year inflation discounted. Well, that's not great either. So I started to look for investments to get a better return of my money without increasing so much the risk. And I found that some commercial real estate is very attractive, particularly the multifamily building segment. In some market, those buildings were providing returns from 12 to 18% per year. That would enable you to potentially double your money every 5 years. And for me, would mean to retire 10 years before. But there is a catch. Those larger multifamily buildings were not accessible for many people. And they are very popular with the wealth families, such as family office groups. I found out that almost 80% of that wealthy group invest in commercial real estate. And I got really intrigued here. How could a small investor take advantage of those investments? In my research, I came across with a model that is called syndication that enables smaller investors, such as you and me, to tap into those opportunities. The law is recent. For example, the 506C was amended in 2012 that would enable syndication promotion. Very recent here. So we group the money of 10 to 40 investors, maybe more, maybe less, and we leverage that money with the help of a traditional lender like a bank. I'll give an example. Let's say we're buying a $10 million building. We would borrow from the bank $8 million. And then the investors would come up with the remaining 20%, let's say $2 million, and an additional closing costs, disposition costs, and investment for the remodeling of the building. So let's say $3 or $4 million. Bottom line, you buy the building with a percentage of that value. Watch my video on leverage that I give you more details. The second step here is that a group of people of 4 or 5 would manage and operate that building in behalf of the passive investors. And that's the beauty of having an operator. You don't need to get involved with the daily operations, fixing toilets, trying to collect rent, and you'd get a lion's share of the profits. The particular buildings that I look are the ones that have an opportunity for improvement that is called value add. So I would enhance the common areas and add amenities such as dog park, laundry room, exercise room, barbecue place, working office, and then I will remodel the units as the lease expires, so we don't miss the beat there. Improving bathroom, kitchens, floors, so forth. Usually, tenants appreciate to live in a cleaner, more comfortable, and safer place. Second step here is to adjust the rents to the market rate as appropriate. That will improve the profitability and increase the value of the property. When this is stabilized after 3 to 5 years, we will sell and realize the profits. Investors, you for example, will get not only a preferred share of the rental income, but also participate on the upside when the building is sold. That's how we can get from 12 to 20% depending on the case. But for this to happen, some conditions are required here. You need to buy at the right location. You need to buy at the right price. And then find locations where there is demand for better housing. Cities that are on the path of progress, there is job growth, and so much more. Then, other element that needs to be in place, you need to have a team of experienced operators that will execute the plan well. Not all projects are the same. Over my 20 years of a successful career, I helped large multinational companies to achieve amazing results with ambitious projects. Now, I'm using all that experience associated with the know-how of people that have been doing multifamily investments for a long time to bring those opportunities for you and run those projects. And also, I will invest with you. My money will be side by side with yours. Take a look at my next videos to learn more about multifamily investing. And just a disclaimer here, the information provided here is not investment, tax, or financial advice. You should consult with a licensed professional, such as lawyer and accountant, for advice concerning your specific situation. See you soon.